What's going on, investors? So welcome back to Frunkla, where we talk about Bionano Genomics. So in this video, I'm going to be talking about a lot of things. As you guys can see, my screen is completely full. I have been, putting all this data together for the past 4 to 5 hours. I went through it, several times, and I would love to talk about what you guys should expect in June. Um, I'm going to be answering questions, after this live stream. So if you can hear me, you guys, what's up? Could you please let me know if you can hear me, if everything is fine with the audio? Let me know in the comments, please. So first of all, we are going to talk about Bionano Genomics, the latest PR from Bionano Genomics, and of course we have two news that we have to cover. Okay, before we dive into CPI data. Okay, good. So before we dive into CPI data, PCE data, and what you guys should expect in June, because I think June is going to be very, very important for the market. And my mission with this video is to help you to save some money, or help you to make some money. Of course, this is not financial advice. I'm not a financial advisor. I'm just here to share some educational content with you guys. So now let's start with this. I have about 10 pages, so this video is going to be possibly, this live stream will be possibly like 1.5 hours, so please bear with me. Now we have this one dropped on the 26th of May. Okay, but I'm yet to cover it. It's the title says first published study of OGM in pediatric AML shows OGM identifies MRD markers and other novel variants that can impact case management. So not to waste your time on this, I'm not going to dive deeply into this. This is more or less about Bionano Genomics announcing that there is a publication out there that the first peer-reviewed research study using optical genome mapping to analyze genetic aberrations found in pediatric patients with acute myeloid leukemia AML. And of course, this is another beautiful news for Bionano Genomics, because if you take a look at this, AML is the second most frequently diagnosed blood cancer in children. And it's a remarkably complex disease characterized by a wide spectrum of genome variations, including, structural variants. In this peer-reviewed, okay, the study published in Cancer Research at the University Hospital in Essen, this one happened in Germany. They analyzed about 24 samples in pediatric patients with AML using optical genome mapping and traditional methods using FISH and karyotyping, and of course, Bionano Genomics comes out. This more or less like concordance, okay? They are more or less still comparing FISH with karyotyping to determine if OGM can be, they are trying to make OGM standard of care method. That's of course the purpose. So this is a wonderful news for Bionano Genomics, and okay, and according in 70% of the cases, significantly more structural variations were detected using optical genome mapping than cytogenetic methods, and these structural variations are believed to be highly relevant to the understanding of pathogenesis of AML. So that's a beautiful news about this. This is very good for Bionano Genomics, like I said, and this was Dr. Eric Omlin, the CEO of Bionano Genomics, has to say about this. I'm just going to cover this. I already highlighted this part. He said, I quote, OGM performed well compared to traditional methods, but the compelling value proposition is its ability to add incremental findings that have the potential to impact disease monitoring and outcomes. The detection of novel MRD markers described in this study underscores this point very strongly. So that's what Dr. Eric has to say about this. Now, for those of you that are wondering what exactly is the meaning of this news, okay, this right here was shared by one of my friends on Stock Tweet, and if you go down further, you can see that I'm going to quote Dr. Eric once again right here. Okay, so why is this important? The detection of MRD can be followed over the course of treatment. In doing so, MDR can be used to determine whether treatment is working or if a patient is relapsing. During this study, 70% of cases revealed significantly more structural variants when using OGM compared to traditional cytogenetic methods. So that is how optical genome mapping came in stronger than the likes of karyotyping, FISH, and so on and so forth. So that is the good news about that. So let's go to the second news, and then we can dive into CPI data and what you guys should expect. This is a very, very important live stream. Normally I was not supposed to even record any more videos today, but so this is another news from Bionano Genomics, dropped on the 27th, and this one says Bionano announces Glass Lewis recommendation and encourages stockholders to cast their votes ahead of June 9th annual meeting. So on the 9th of June, there's going to be, shareholders meeting, and because somebody wrote me that I should try and shed some light on this. The reason why they want you to, cast your vote and support that they want to continue working with Glass Lewis is because it's going to help the expenses of BNGO. If you want to, this more or less like let me go down a little bit. I think I highlighted some important. Okay, so today I announced that Glass Lewis and Co, a leading independent proxy advisory firm. So this is independence because the SEC require every company to have an independent advisory firm, and Glass Lewis is possibly the company that Bionano Genomics is presently using. They want to continue to work with them. That's why they want you to support them with this by casting your vote. And so according to the CEO, he said we are grateful for the Bionano Genomics on stockholders who have already submitted their proxies. And he said conducting the annual meeting as planned helped us avoid the extra expenses that would result from delaying the meeting if we don't reach quorum on June 9th. So that's why they want you guys to vote. It's going to help them to save some money in a nutshell. Okay, so this shareholder meeting is going to be on the 9th. I think night is let me see. Night is supposed to be on next week or so. Today is 30th. So I don't think I'm going to be live streaming it. So night is going to be next week Thursday. So it's going to be next week Thursday. So that is Bionano Genomics shareholder meeting. That is possibly also going to help Bionano Genomics somehow. I don't know why my computer is extremely slow. So this is the second meeting. You guys should go and vote. And let me close this out. So for those of you wondering what it looks like to vote as a shareholder, this is an example from Cisco Investor. He shared this a couple of days ago. This is what it looks like to vote during this process. And you guys can see the first question says vote board of directors, and according to BNGO, they want you to click on 4. Okay, election or director David L. Barker, PhD, board recommendation 4. So they want you to select 4. And then the second is election of director R. Eric Comley. They want Bionano Genomics CEO to continue as the director, and the board recommendation is 4. So they also want you to select 4. And then the third one is election of director Vincent J. Wong, JD MBA, and they want you also to recommend his continuation as director. Then if you come to the first one is vote for board of directors, and then if you come to the second one, it says approval on an advisory basis of our executive compensation. So they want you guys to for compensation. So I think Cisco selected abstain. He's not against it, he's not for it. So but the recommendation is to be for it. So the third one says approval on an advisory basis of the frequency of the advisory approval of our executive compensation, and this one is 1 year. They want to select 1 year. Cisco selected 1 year. So the fourth one is to ratify the selection of BDO USA LLP by the audit committee of the board of directors to serve as the company's independent registered public accounting firm for the fiscal year ending December 31st, 2022, and they want you to select 4. So that is all about the voting. You guys, I think you still have to the possibly next month to cast your vote if you hold shares of BNGO. But I, for example, I am with eToro. It's impossible for me to vote. The best thing I can do is just to contact eToro and ask them to vote on my behalf. So for those of you that are in USA with other broker, you can easily vote and cast your vote, and that's more or less the purpose of being a shareholder. You are helping to shape the company. So that is that about voting. Now let's talk about this news right here. I found this is a Chinese I have to translate it so that we can all this is in oh my god, I think I clipped something. Okay, so I have to translate it to English so that we can read it. This more or less about Bionano Genomics in China. Nothing big. It's about a data output and data analysis performance of Bionano Genomics Sapphire device. Because Bngo is trying to expand their business, in Asia. As I already, shared a video about, I think 2 months ago, that Bionano Genomics is, exploding in Asia, for example. And you guys have to understand that in Asia, we have a lot of, people living there. Now, this one is just about Bionano Genomics Sapphire machine used for optical mapping data collection. They spoke about, the Sapphire device. This is just to show you guys that, in Asia, in Chinese language, they are also talking about Bionano Genomics, not only in America or in Europe, for example. So this was translated, from Chinese to English. And then they spoke about, two types of Bionano Genomics generation, Sapphire device generation. This is the Sapphire 1 generation, and then the Sapphire 2 generation. And the Sapphire 2 generation, you are able to put in two chips according to this. The Sapphire 1 generation, you're able to put in just one chip, one consumable, one sample. So that is that about China. Now let's talk about inflation. Okay, inflation. I shared this with those of you that are already paid member of the channel. I shared this 3 days ago. That's goodbye inflation. If you are not a member of the channel, for sure you didn't see this. I share this, and it says goodbye inflation. And as you guys can see right here, inflation, this is PCE index year on year. Okay, the data came in at 4.9%. Okay, it used to be 5.2%, and as you guys can see, it is clearly coming lower. Okay, this was the first good news that made the market to rally on Friday. For those of you that are wondering why the market rallied on Friday, I shared this, I believe, before the market opened, and I also made a public post that inflation is has peaked, I believe. So non-members of the channel can for sure also saw that post. So this is one of the data that I shared with a member of the channel, and I said goodbye inflation. United States core PCE price index year on year at 4.9%. And as you guys can see, historically, before October 2021, it used to be less than 3%, but because of the way the Fed has been the monetary policy and so on and so forth, it has been rising. And this right here is one of the reasons why Bionano Genomics, for example, started to decline last year February. Okay, any company that is not yet profitable started to decline last year February. But the thing is, I wasn't sharing all of this data with you guys last year. We were just focused on fundamental analysis, 100% fundamental analysis of Bionano Genomics last year. But right now, I have been digging deeper into inflation, PCI, all these kind of things, CPE and the PCE and so on and so forth, to try to, understand how the economic works, the macroeconomic data, and so on and so forth. So you guys are going to be enjoying a lot of, solid content, solid information about what is expected to happen, in the stock market in the coming, weeks, months, and so on and so forth on this channel. This is a wonderful news for, channel members. So now to move further, now there was a report on from Goldman Sachs. Now we are diving into the CPI data. Okay, I want to tell you guys what you should expect next month. Okay, starting from Tuesday, starting from tomorrow, Wednesday, next week, I want to show you guys what you should expect. But please bear with me, because this is going to take a couple of your minutes. So now, last year, this thing was released by Goldman Sachs. Okay, I believe this was on in October. Let me see the dates once again. So this was released on 28th of October 2021. And the thing is, most of us missed this data because we were, more or less focused on the share price of Bionano Genomics. We are more focused on, market rallying and so on and so forth, but we didn't focus on all this data that were driving the stock market. Okay, so this was shared on the 28th of October last year, and according to Goldman Sachs, they said the title says a wider CPI PC gap and a hotter inflation dashboard in 2022. Okay, they were expecting inflation to go crazy in 2022. And back then, if you go to my chart back in October, I want to show you guys what has been happening back in October. Let's take a look at Nasdaq, for example, in October. Okay, when the data came out, I'm going to switch over to the weekly candlestick. So back in October, we were somewhere around here when the Goldman Sachs released that data. It was on the 28th of October. Okay, 28th of October is somewhere around here, somewhere around October 28th. So somewhere around here, they released the data. Okay, and if you take a look at this, you can see that after they released that data, this is Nasdaq 100. the stock market more or less started, to consolidate and form a top, okay, back in October, 28th of October. And another thing is Bionano Genomics in November, 3rd of November, that is when Bionano Genomics started to go down heavily. And BNGO started to go down somewhere around here. Somewhere around this data right here is when Bionano Genomics started to go down massively, okay? And so that is that about that. Now let's go back to the data. So this is what Goldman Sachs, said back in October. And if you understand what I'm about to show you, it's going to help you to understand what is coming, when to take profit, for example, when to, when you should expect the stock market to correct. Because most of you guys are mostly buying high and selling, you are buying high and selling low. So this is going to help us to understand when to take profit, for example, short-term profit, and when to buy back low. So in case you don't want to take profit, if you want to dollar cost average, this is going to help you to determine when to add to your position, for example, to dollar cost average. Okay, it's going to help you to minimize your losses. It's going to help you to maximize your profit. That is the purpose of this live stream. Now, according to Goldman Sachs, they said we recently bumped up our 2022 PCE inflation forecast. Okay, and then they said we now expect core PCE inflation to stand at 4.3% at end of 2021, and then 3% in June 2022, and then 2.15% at end of 2022. Okay, right now PCE data stands at 4.9%. If you are a member of the channel, you must have seen the data. I think I can still go back. Oh, so you guys can see right here, PCE data that came in a couple of days ago is now 4.9%. Okay, Goldman Sachs, they didn't even expect it to go to 5 point something percent, and possibly the reason why we jumped that high was because of oil, because of this Ukraine war that broke out back in March, and that's why it got out of hand. So they were expecting PCE data to be at 4.3% at the end of 2021, and then June is next month, guys. They were expecting June PCE data to be just 3%, but right now, last week when the data came in, it was 4.9%. So you guys can already tell that the reason why it is this high is because of oil prices, gas prices, and of course the war in Ukraine, Russia that is presently going on. So one good thing is, if this war in Ukraine, Russia, for example, dies down, okay, or if the price of energy costs drops down, I believe that is the biggest news that we are waiting for right now. Now, to continue, they also say that we also expect CPI inflation to exceed PCE by more than usual over the next year. And they continue, they said, first, durable goods such as cars have a higher weight in the CPI, and it now appears that it will take longer for their very elevated inflation rates to come down. Second, shelter inflation also has a much larger weight in the CPI and is likely to rise sharply. And third, the source data used to calculate the health insurance component that is unique to the CPI point to a spike over the next year. Now, if you take a look at what has been going on with durable goods, cars, for example, used car prices have started to drop down. And then if you take a look at shelter, interest, for example, mortgage and so on and so forth has been increasing, and people are now buying houses less. And some people are already predicting that the housing market is going to collapse. So somehow that is also, helping inflation data, okay, to come down. And if inflation comes down, you guys should expect a stock market rally, a massive rally, okay, not just a rally, a massive rally. And then the third one is insurance component. They argue that, after the lockdown, most people stopped going to their doctors, for example, for checkup, and then insurance company are making a lot of money. So they expect that once lockdown is lifted, okay, that folks are going to folks are going to go back to check their health, for example, and this insurance are not going to be as profitable as they should anymore. So that is some of the point that Goldman Sachs made. And then if you come down to a wider CPI to PCE gap and a hotter inflation dashboard in 2022. Now, in this section, they say that the normal, we also expect the gap between core CPI and core PCE inflation usually to just be 25 basis points. But if you take a look at what has been going on, you can see that inflation right now, according to the last reading, CPI data was 8.3%, and the PCE data came in at 4.9%. It's supposed to be just 25 basis point difference, which means, right now CPI data is supposed also to be around 4.9%. But the thing is, CPI data is around 8 point something percent. So you guys should expect CPI data to come back lower. I'm still going to show you guys all this, chart towards the end of this live stream. You should expect CPI data to come back down to where PCI data is, because according to Goldman Sachs, they always have a difference of about 25 basis points. They always, go hand in hand. If you take a look at this right here, you can see that most of the time, this more or less what they are, more or less what it looks like. They always go, together, and right now they are, the gap is very massive, okay, between these two. So now they also predict that, let me see. So but this now looks likely to take longer because of the longer lasting supply chain challenges and persistent shipping congestion. And as a result, the inflationary boost, especially to the CPI, is likely to last longer, and the eventual deflationary drag is likely to arrive later in 2022 and extend into 2023. So you guys already know that we have this supply chain, challenges, and then we have this shipping problem in China, because of, Shanghai was on lockdown. So a lot of, ships couldn't dock, they couldn't, drop offload some good, or load up some goods and ship it around the world, which affected inflation massively last month and 2 months ago as well, apart from the war in Ukraine and Russia that is presently going on. Now the second point, so this is the first point. The first point is that durable goods such as cars have a higher weight in the CPI data and CPI than in the PCE index, and these categories have experienced larger price increases that are likely to continue in coming months. So that is the first one. The second one is shelter inflation also has a much larger weight in the CPI and is likely to rise sharply, which of course is the housing market. Okay, and then the third one, let me go down. The third one is the source data used to calculate the health insurance company that is unique to the CPI point to a spike over the next year. So because of the lockdown. So insurer profitability, I already spoke about that. So I think that's that about this page. Let's go to the next one. So I'm going to close it. Now so if you take a look at this one right here was released on the 7th of April by UBS with Daniel. Okay, and according to UBS, they predict that inflation has peaked, and I already shared a lot of information with with the channel members that inflation has peaked in March. Okay, after we saw Ukraine and Russia war going on, I projected that inflation possibly has peaked in March. I have been sharing that since March. Okay, for those of you that are channel members, you already know about that, and that's of course why we were able to buy the dip at 1.15 US dollars and make some good profits along the way. Now according to UBS, they predict that inflation has peaked, and they warn that March consumer price index will still be really nasty, and this was released before we saw that data of March. If you guys can look at this very well, this was on the 7th of April, and on the 12th or 11th of April, that was when the March data came in, and it shows that UBS was right. So there are some points that I just want to make in this on this page, so that you guys can know what you should expect. Okay, now so back then on the 7th of April, UBS warned investors that the March inflation read set to come out on April 12th will likely be pretty ugly. That is saying something considering the CPI data, blah 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 blah. And according to them, they said they were predicting that the CPI data for March was going to come in at 8.5, and that is of course what happened back in March. We saw the CPI data, it came in as at 8.5%, and then after March, in April we saw the in May we saw the April data, it came in at 8.3%. So if you take a look at this graph right here, you can see that inflation has peaked. Okay, CPI data has peaked at 8.5%, and then this of course their prediction about this was wrong, because the data came in at 8.3%. okay, so more or less you can see a decline of about that's about 20 basis points. Okay, but of course there's a decline, and as you guys can see, according to UBS prediction, they are predicting that it will keep declining till the end of the year. Okay, but the thing is, if you go deeper, okay, according to their forecast, this is a red flag right here. Okay, that's why I want you guys to pay attention to what is coming. Okay, now, UBS team also said that it expects gas prices, which rose to record highs in March, will decline every month from April through November. But the thing is, gas prices are not decreasing. Okay, right now natural gas is out of hand, and oil right now is trading closer to 116 US dollars. So that is the red flag. Okay, now we have two good news, we have one bad news, and that's of course why you guys have to pay attention to gas prices. It is very, very important. This is not only about Bionano Genomics or Tesla or whatever. This information that I'm sharing with you guys is going to help you not only with Bngo investment, it's going to help you generally to be able to at least a well calculated probability that the market is going to rally if this data comes out, or if this data comes out the market is going to sell off, so that you can prepare yourself to buy the dip. That's why I'm sharing this information with you guys. Now, this is the good news. We have two good news right here and one bad news. The bad news is that oil prices is not going down. So this information that they shared with us, that the CPI data is going to keep going down, perhaps it's not going to be the case. Okay, because when April came in, it came in at 8.3%. So on the 12th of this month or so, we are going to see the data for May, because we're going to be in June. Sorry, for June we're going to see data for May in June. June is next week. So now, the good news here is that when it comes to core CPI, a measure that strips out volatile food and energy prices, UBS economists said to expect a 6.5% year-over-year increase in the next Tuesday's monthly inflation report. But from there, they believe a steady decline will follow as supply chain constraints ease. So this one right here is the good news, because China has lifted all this lockdown in Shanghai and so on and so forth, and supply chain is supposed to ease. And we also saw the earnings report from Target, from Walmart. We see that inventory is rising. Okay, consumers are not going crazy, they are not buying like they used to buy before. So it means that inflation is expected to keep going down. This is the only good news right here. And the second good news is that housing prices increases, which make up almost a third of the basket of used used to create the consumer price index, will also begin to moderate moving forward, the economist said, leading to a slowdown in core inflation. So they're also predicting that housing prices is going to stop going higher. It's going to more or less consolidate and perhaps start to go down, which is of course going to drive core inflation to also come back down. But if you add oil and food prices, then it's going to ruin everything. So that's why core inflation, according to UBS, they are predicting that it's going to be at 6.5, and that prediction was correct. Okay, because when that data came out, it was 6.5. I think I have that data somewhere. I'm supposed to have it somewhere. Core inflation came in at 6.5. Okay, PC, we have PC data here. Core inflation 6.5. Okay, this is core inflation. As you guys can see right here, I have the data here. So we have core inflation. Just a second. Why is it like this? Why is it like this? It's supposed to be bigger. Anyway, so we have core inflation right here. This is inflation at 8.2, 8.3%, and core inflation came in at 6 points, more or less 6.2% or so. Okay, and as you guys can see, the difference between inflation is the blue, this normal inflation is the CPI. The CPI data is the blue line, and the core inflation is the red line. And according to Goldman Sachs, for example, they expect the gap to just be 25, about 20 to 25 basis points. And historically, you can easily see that they always follow each other. Okay, whenever there's a massive gap, like in 2018, that's when we were in a recession, and then in 2020, you can see also the massive gap. Okay, in 2020 during the lockdown. So right now we are experiencing the same thing. So this gap needs to close. Okay, we need to see normal inflation coming back down, and core inflation is without food and gas prices, for example. So if oil prices comes down, you guys should expect, normal inflation to come back down to core inflation, and that is going to help the stock market. Okay, so those are some very, very important information that you might want to be aware of and pay attention to. So I think that is that about UBS. Now they also spoke about, okay, so they spoke about, still UBS economists also included a caveat in their report, noting that their forecast rely on a continued reduction in the effect of C19 worldwide, as well as falling oil prices. So this right here, okay, right now we can see that a lot of countries have lifted the lockdown on C19, and then apart from oil prices that has gotten out of hand, everything seems to be going on fine so far. So right now we just need somehow a miracle to happen with oil prices to come down, because natural gas has gotten out of hand, guys. Okay, now that is that about this page. Now let's go to the next page. So this is the latest one from UBS from the 26th of May. And according to this title, it says that inflation worries moderate after hawkish turn by central banks. Okay, this one is from the 26th of May. And this one right here is one of the reasons why the markets rallied last week. Now, if you come down, you can see this was put together by the chief investment officer at UBS. Okay, just a second. So this was put together by the CIO at UBS, and then this is thought of the day. Now, according to the guy, he said top central banks have continued to stress their determination to dampen inflation with hawkish signals from both the Federal Reserve and European Central Bank in recent days. The release on Wednesday, which was last week, the PCE data, the release on Wednesday of the latest Fed meeting showed policymakers agree that rates should be raised expeditiously to a neutral setting, with 50 basis point increases likely appropriate in the next couple of meetings. So, for June, we are expecting the Fed to increase the interest rate by 50 basis points, and then for July, we also expect them to increase by 50 basis points, which of course is the reason why the market is presently stable. But if CPI data comes in next week, and then if we see something that is not decreasing, if we see something that is increasing, you should expect the stock market to go crazy once again. Okay, so that is of course one thing that you guys want to pay attention to. Now, if you go further down, it says that the US 10-year break-even inflation rate continued to fall this week and now implies an inflation rate averaging 2.5% in the decade ahead from 3% earlier this month. The 5-year slash 5-year forward inflation swap for the Eurozone fell to just 2.1% on Wednesday, consistent with the ECB's 2% target and down from a peak of 2.5% earlier this month. So the CPI data that came in so far has been bullish for the stock market. So the next one hopefully is also going to be bullish. Now, these are the 3 points that they made in this article. Okay, the first one says labor market data is starting to make a wage price spiral look less likely. The second one is about goods price inflation is starting to fall, and the third one says there are preliminary indications that higher rates are already cooling housing activities. Now, this is the reason why the Fed are going to maintain their 50 basis points, 2 times 50 basis points. But there is a but. Okay, now before I dive into the but and to let you guys know what you should expect, if you take a look at this, Challenger report its first annual increase in job cuts in 15 months in April. Falling labor demand will help moderate wage growth and ultimately inflation. So if labor demand keeps dropping, it's going to help inflation to drop. Okay, and what's gonna determine this is the next economic data that you guys should pay attention to. JOLTS job openings release for April next week. Okay, and then we have non-farm payrolls for May. These two things are going to determine if this is still going to help the stock market or not. I'm still going to share information with you guys about these two things, that because one is going to be on Tuesday, okay, on Wednesday. One is going to be on Wednesday, and the second one is going to be on I think on Friday or so. So if these two data comes in positive, it's going to help shares of Bionano Genomics to rally. If not, you guys should expect a sell-off this week. It's as simple as that. Now, the second one is goods price inflation is starting to fall. Now, if you take a look at used cars, televisions, smartphones, are starting to drop because consumers are not, buying all these items anymore. Like they were buying it during the lockdown, when people are staying at home, they were watching televisions and so on and so forth. And then, buying new smartphones, electronics, and so on and so forth. Buying PlayStation 5, the demand was very high and the supply was very low. But right now, it's not the case. We have some good, economic data that it has started. It's starting, to fall. And then in recent months, consumer spending on durable goods, which surged during the pandemic, has eased, helping to relieve some supply side bottleneck. As consumption patterns normalize, with households spending more on services related to goods, we expect this trend to continue. So that's another bullish news. And then the third one says there are preliminary indications that higher rates are already cooling housing markets. And then they said, while we don't expect a repeat of the 2007 house price collapse, we continue to believe the substantial increase in both home prices and mortgage rates will cool sales activity and likely lead to a slowing in the rate of price appreciation. Okay. Now, to round this off, you guys can see that. So we expect moderating inflation to enable central banks to ease back on hawkish rhetoric later in the year, calming fears of an impending recession. So what they are trying to say is that there is not going to be any recession. They expect, central banks to, more or less reduce their hawkish rhetoric later this year. I believe second half of the year. However, investors are likely to await further evidence before becoming convinced that the threat is passing. So if I make video that the bottom is in, these are some kind of information that you guys have to be aware of. If these things comes out negative, it's gonna affect the stock market and likely Bionano Genomics as well. So this one right here is a bearish information. In the meantime, we recommend bracing for further volatility. So you guys should expect further volatility to keep going. And then they said, and inflation will remain above target for some time to come, a situation that has historically benefited value over growth stocks. So what they are predicting right here is that you guys should invest in value over growth stocks. Bngo is a growth stock, you have to remember. Okay, now so once again, the title says inflation worries moderate after hawkish turn by central bank. So once again, that's the title. Now to go back to show you guys what you should expect in the coming days. Okay, if you come to economic investing.com, we have US non-farm payrolls. We have this data coming in on the 3rd of June. So this is going to be in the next I believe on Wednesday or so. So this is going to come in, and we are expecting about 330,000. Okay, that is the forecast. If the result, the actual comes in at 330,000 or lower, this is going to be bullish for the stock market. If it comes in higher than that, it's not going to be bullish. Now, if for those of you wondering what non-farm payrolls is, the non-farm payroll measures the change in the number of people employed during the previous month. So what the investors want to be sure is that companies have reduced the rate of employment. They have reduced how many people they are employing, which of course means companies are now being careful. Okay, like Bionano Genomics chief financial officer said during the first quarter earnings call, he said they are going to reduce their rate of employing new people. Okay, so you guys can see according to this data right here, if companies reduce how many people they are employing, that is going to be good, but it means they are being careful. But if companies if they increase the number of headcount, if they keep employing, then that is bad. But the good news is, according to everything that I have read so far, I think companies are starting to reduce the number of people that they are employing. Okay, so the data is expected to come in on the 3rd of June. That is the first most important data in this week. The second most important data is the US JOLTS jobs job openings. For those of you wondering what that is, JOLTS defines job openings as all positions that are open, not filled, on the last business day of the month. So we need to be sure that we have fewer job openings, okay, and not really to have fewer job openings, but we need this right here, this number to come in a little bit lower, because you guys can see that it has been going crazy, and these are the things that are affecting inflation. Okay, it has been more or less consolidating a little bit since December, but we need this to come down. And according to the forecast, investors are expecting 11.4 million, okay, job openings, and that's what we expect to come, to come out. As you guys can see right here, from February 1st, it has been going higher. It has been green, 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 and that has been affecting the stock market. So we need something like this right here, okay. We need it to be a little bit red, and that's because if you come here, you can see that a reading that is stronger than forecast is generally supportive, bullish for the US dollars. And if US dollars keeps going higher, it means stock market is going to keep going down. Okay, so while a weaker than forecast reading is generally negative, bearish for the US dollar. You guys, for those of you that are into currency trading, if you are trading US dollar, euro, or something like that, so that is going to affect US dollar in this week. That is the second most important data, and this is going to be released on the 1st of June. Look at that, 1st of June. Today is 30th. So in the next 2 days, tomorrow is 31. This one is going to be released on Wednesday, I believe. So there is a possibility that on tomorrow, when the market opens, the market is going to rally. Then investors are going to be waiting for this data to be released. If this data is released and it comes in as expected, or comes in red, you should expect the stock market to if not rally, it should consolidate. But if this data comes in green, there is going to be some kind of if not, we are going to some kind of profit taking if this data comes in green. And the second data is going to be released on the 3rd of June. I believe this on Friday or so. So 3rd of June is going to be on Friday. So this one is going to be released on Friday, and the forecast is 320,000. And if this also comes in more than they are forecasting, then you're going to see some kind of sell-off once again. If you take a look at this one came in on the 6th of May. If you take a look at Bionano Genomics on the 6th of May, for example, at 420,000, that's why we had a massive sell-off in May. When that was when we saw that 1.15 US dollars, and then some of us bought the bottom according to the data that came in after. Now these are the top 5 things that you guys should expect next week, and these things right here are of course going to shape what we should expect in June in general. Okay, now top 5 things to watch in market in the week ahead. Now if you come down, you can see that, like I already shared with you guys, Friday's non-farm payroll is very important. Okay, then we have the Federal Reserve will be able to tighten monetary policy without tipping the economy into recession. If this data right here reports, which could help set the market tone for June. So this is very, very important for June. Okay, for those of you, I have about 13 people watching it right now. Wonderful news for you guys. Okay, this is a good news for you. So this is going to be what's gonna happen. Whatever is gonna happen in June is going to be set by this data right here. Okay, and then we have the investors will also be looking to PMI data out of China. Okay, China is also going to determine what's going to happen in June amid mounting concerns over the economic outlook for the world's second largest economy hit by C-19 restrictions. Meanwhile, Eurozone inflation data is also due on Tuesday. Okay, Eurozone inflation data is going to be due on Tuesday. The CPI data of Europe is coming out on Tuesday, and whatever, if that, and according to analysts, they are expecting like 7.7% CPI data to come in from Europe, and that is expected to be the highest in Europe. Of course, gas prices has been going crazy, and it's affecting, Russia is more or less supplying, for example, Germany 40%, natural gas, and gas. It has been affecting German economy since this war in Ukraine and Russia. So this month is expected to be the highest, the peak of inflation in Europe, coming in at 7.7. And then the European Central Bank are going to come together next week to determine if they are going to hike the interest rate by 50 basis points, just like you guys in America are already doing. They're also going to determine if they are going to hike it by 50 basis points or not, which of course is going to help. For those of you that are invested in, Europe stocks, for example, this data that is going to come in, is going to be very, very important. It's coming in tomorrow on Tuesday, and that's of course also, I believe this is also going to affect, US stock market. Okay, now, so we have non-farm payrolls. We have the Jolt job openings also. Okay, non-farm payroll is going to excuse me. Non-farm payroll is going to come in on Friday. This Jolt is going to come in on Wednesday. So those are the things. And then we have China PMI, and then we have Eurozone inflation data. Now, stocks to extend recovery. Data on Friday showed that consumer spending rose more than expected in April, and also indicated that inflation slowed. That is why, the stock market rallied on Friday. And then the Fed has raised interest rates by 75 basis points already so far this year. And markets are pressing in 50 basis points rate hikes in June and July. But if the CPI data comes in on the 12th of next month, June, and the CPI data for May is going to come in next month, it is expected, to indicate that inflation is dropping. Okay, but if there's always that if something crazy goes on, and because the energy oil price is still right now trading at $116. Natural gas is out of hand in America. I believe you guys, if you go to the tank station, for example, now I believe you are paying a lot of money, to tank your car, for those of you that are driving ICE cars. So if all this data, for example, affect inflation, the CPI data somehow, and it comes in higher than expected, okay, we will see what's going to happen, but that's not going to be bullish. That may be cause some kind of consolidation, but you should be aware of what is coming, guys. Okay, now the third one is the Fed. We have several Fed members. They are lined up to speak, and as you guys can see right here, we have Fed Governor Christopher Waller is due to speak on Monday. Today, I believe New York Fed President John Williams, and blah 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 blah. They are expected to speak on Wednesday, followed by a day later by Cleveland Fed President Loretta Mesa is expected to speak on Thursday. Now, like I already shared with you guys, Chinese PMIs, is going to drive what's going to happen in June, and then Eurozone inflation data. You can see it right here. The Euro area is to release its latest inflation flash estimate on Tuesday, with economists expecting the consumer price index to hit another record high of 7.7% in May, up from 7.4% in April. And then on the 9th of June, ECB members, they are going to come together and decide if how many percentage they want to hike the interest rate in Europe, and that is going to affect the stock market as well. Of course, if you are not a member of the channel, these are the things that I'm going to keep monitoring and share with members of the channel. If you are not yet a member, consider becoming a member. This may help you to save or make some money. It all depends on you. It costs about 99 cents every month. So if you want to be a member, that's another thing, another reasons for you to become a member. I already shared this, so I'm going to close this. So CPI data, guys, CPI data, consumer price index. The next date for this data is the 10th of June. Okay, and of course, analysts, economists, they are already saying that inflation is already decreasing. So I mean, hopefully no drama is going to happen, but you guys have to be aware that this data is coming in on the 10th of June, and most of the time investors always take profit before this data comes in. If the data comes in positively for the stock market, then you can see a rally, but how much they are going to be taking profit, nobody knows. So there is still a possibility that the stock market is going to maybe peak, maybe tomorrow, next tomorrow, Nasdaq for example. Then we will start to see a decline until the 10th of June, when the CPI data is going to come out. Okay, so don't sue me, bro. If I tell you bottom is in, it doesn't mean you should sell the house and go crazy. We have CPI data coming in on the 10th of June, and this right here is going to determine what's going to happen. Okay, because Fed, they already said that they are going to be increasing the interest rate hike, in the next couple of months by 50 basis points 2 times. So if this data comes in super high, right now CPI data is at 8.3%. If it comes in at 8.2%, for example, or comes in again at 8.3% because of the energy prices, then that's going to be a bad news. But hopefully it's gonna come in at 8% or below 8%, and that is going to be a wonderful news, which means the market will continue to rally. But before 10th of June, there is a possibility that the market is going to consolidate or the market is going to calm down. So right now, Bionano Genomics, for example, closed at 1.70 something percent on Friday. Maybe tomorrow we are going to see some kind of little rally or consolidation. Then investors will start to think about 10th of June. So that's more or less what I'm trying to show you guys in this video. So I think that is that about that. Now let's talk a little bit about the price action of Bionano Genomics, and then I can finally end this live stream and try to answer some of you guys' question. For those of you that this I set this to only members of the channel can more or less post a ask me any question. So that's how I'm going to leave it, because I don't want to waste any time with this live stream. Now on Friday, Bionano Genomics closed, rallied about 14.3% on Friday, closing at 1.78 1.75 US dollars. And according to the video that I just shared most recently about a couple of hours ago, BNGO was the second most positive, most green, most rallied, whatever you want to put it, in my watch list. Okay, I believe I watch over 100 tickers. Okay, and BNGO came in second on Friday with this 14.38%. Okay, so now if you take a look at the price action of Bionano Genomics, okay, because there is something I want to share with you guys before we end this video. So if you take a look at this price action of BNGO, you guys can clearly see that we have a bottom right here. This one came in on the 28th of April, and then last month we saw this massive sell off, setting a bottom at 1.15 US dollars. Okay, and then we have another right here, okay, in couple of I believe 2 weeks ago or so at 1.45 1.45 US dollars. This is the 4-hour candlestick. So I think this was on Monday or so. Now you guys can clearly see that we have two more or less a head and shoulder pattern right here. We have a left and a right support right here, and then we have the main support right here, the head. And if you plot your Fibonacci, you can easily tell that we are more or less consolidating at this 38.2 Fibonacci retracement level. Okay, that's where the price is more or less consolidating. And then we have all this data coming in. On Tuesday we have a data coming in, on Friday we have a data coming in, non-farm payroll is coming in, and then on the 11th of next month we have another data coming in. So what's gonna happen is what comes out on Tuesday, I'm going to be sharing those information with those of you guys that are channel member of the channel. I'm going to share that information with you guys. If it comes in positive or negative, I will tell you guys more about it. And that what's gonna happen tomorrow is going to determine what's gonna happen on Tuesday. Let's say we rally a little bit tomorrow, and then the data comes in negative, then you should expect the share price to come back here. But if the data comes in positive, then we should expect the rally to continue towards 2 US dollars. Okay, towards this 50% Fibonacci retracement level. But if we get here before the data comes in on Friday, and the data comes in negative, you should expect the price of BNGO to bounce back. Okay, to bounce back lower to this 38.2% retracement level. And then on the 11th of next month, during the CPI data, if the data comes in negative, I think we are coming back down once again. Okay, but if the data comes in positive and supports stock market rally to continue, then this is what we are looking at. We are looking at somewhere above 2 US dollars, 2.25 US dollars. That's what we are looking at. But the good news is, if the data comes in negative, you guys should expect more or less a double bounce. I don't expect the reason why I always make video to show you guys that the bottom is in, it is to show you guys where the strong support is. Whenever I tell you, for example, that the bottom is in at 1.15 US dollars, and the price comes back down to 1.15 US dollars and breaks it, it means you should expect the price to go lower. That is more or less what most of all these videos that I am making about bottom in or not, that's more or less the meaning of all these videos. If, for example, we come back down to 1.45 45 US dollars, and then we break it, then you should expect the price to come back down to this, the next support level, and to retest it. And if we break it, you should expect it to go lower. But in a bullish case, if we come to this 38.2% retracement level around this 1.80 US dollars, for example, and then we break it, then you should expect the price to to approach 2 US dollars. So that's more or less the meaning of most of my videos about bottom is in. I can't just come here every day and share videos every hour and talk about price action and so on and so forth. So that's more or less the meaning of all those videos. So let me take a look at the daily candlestick so that we can end this video. All right, so as you guys can see right here, if everything comes in good, okay, according to what UBS, for example, is predicting, if all this data comes in positive and support a stock market rally to continue, then this is what we are expecting, guys. We are expecting to get back to this 100% level. We expect the share price of BNGO to rally massively towards this level. So I think that is all about that. And thank you guys, thank you guys, um yes. So since nobody's since I don't have any question, I think I'm going to end the video right here. I will save it and try to share it once again for those of you guys that are not watching this live stream right now. Hopefully it's going to help you guys to make. Normally this video is meant for channel members only. Okay, normally I should just delete this video and post it on the channel page, but I'm going to leave it as public video, and hopefully it's going to help other subscribers of this channel to know what they are doing with Bionano Genomics. So that is it, guys. Have a wonderful day, guys. See you guys in the next one. I remain your boy Dayo. This is Frunkla. Remember to smash the like button before you leave. Ciao, ciao.